Let's turn our attention to the markets. We did see stocks push higher on the back of that initial statement that came out from the Fed yesterday. The S&P 500 now dipping into the red, although trading pretty flat. And we've been watching bond yields as well as the 10-year is pushing lower. Let's bring in Yahoo Finance's Jared Blikre, who's tracking all of the market action for us today. Jared.
That's right, Akiko. I'm glad you mentioned bonds, but we're going to start out with stocks first. And let's take a look at the S&P 500, which, as you noted, is trading pretty much unchanged. I'll pull up a intraday chart here. You can see we started out in the green, dipped into the red here, and just slightly in the red. I just want to draw attention. I'm going to put this in a candlestick chart. We are still set for the highest closed ever in the S&P 500, but a little bit too early to call that one. Also, we've seen volatility. Let's see here. We had it a little bit up from the opening print, but down from yesterday. Kind of interesting to see volatility tick a little bit higher as we see equities push higher as well. But then it's the Dow that's really outperforming. And this is a time for value and cyclicals to outperform. So let's take a look at the bond market right now. We got the 5-year T-note yield. That is down 7 basis points. And as Akiko noted, 10-year is down a little bit less. That's down 3 basis points. Guess what? The 30-year is up 2 basis points. All of this put together means the lower end of the curve, the shorter maturities, those are going down more. Those yields are going down more. And the long end of the curve, at the very long end, that is going up. And so we have an expanding yield curve. Guess what that means? Combined with the US dollar trending lower right now, at least over the last day, that means that it is risk on. And the market is interpreting this as a dovish statement and report and presser from the Federal Reserve and Jay Powell. Want to check out gold futures because they are confirming this price action as well. You can see baking in a little bit more inflation than anticipated yesterday. Why would that be? Well, I think it has to do with the fact that the total number of interest rate hikes, even though we're going to have, or even though the market is expecting 3 over the next year, I think over the next 3 years, we're expecting 8 now. That's a little bit lower than the market anticipated. So this screen that we're looking at here, the mega caps are under a bit of pressure, and they are taking a backseat to the value and cyclical trade. But worth noting, Apple down 2.5%, Tesla down almost 4%, and NVIDIA down 5%. And I just want to check out the semiconductor space, seeing a lot of dark red here. And that is after yesterday, they really had a banner day. So this is over the last 2 days. And considering those huge gains that we saw yesterday, I think it was 7-8% for both NVIDIA and AMD, still holding on to those gains, but taking a backseat today. So let's take a look at the sector action. And we are seeing energy, financials, materials, healthcare, and industrials. Those are outperforming to the downside. We see tech and consumer discretionary, which has been under a lot of pressure lately. Those are the biggest drags. And let's check out a 1-month chart on the consumer discretionary sector. You can see still underwater about 4% for the last month. Finally, want to check up on the reopening trade, see what the travel sector is doing. Kind of a mixed bag. We got some hotels in the green, Marriott and Hilton just barely green, but the cruise lines and airlines largely under a little bit of pressure right now, guys.
Yeah, pretty fascinating to watch that mix continue there, Jared, as we see tech stocks in their decline here. We'll keep an eye on all that. Appreciate the update.